All right, welcome back to a Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Well, we've got over the PPI hurdle this morning. Now we got over the WASD hurdle, so now it's just a Friday day. Let's take a look and see how we are meandering along with these markets. Let's take a look at corn. It's been higher. It's given back a few cents, but it's still, you can tell it's very quiet now. 2 3/4 cents higher in the March to 6.45 1/4. Maize up 2 1/4 cents to 6.46 1/2. Let's check on the beans. What are soybeans doing? Boy, I want to say a lot, but they're not doing it. It's hard to say. March is only up 1 tick. That's 1/4 cent, 14.90 1/2. Now they're all down 1/4 cent. If you wait long enough, it changes. It's like the weather, right? March is down 1/4 cent to 14.90. Maize down 1/4 cent to 14.95 1/2. There you go. But wheat in Chicago, that Chicago wheat is down about 9 cents. 9.5 cents lower in the March to 7.36 3/4. That's a 1/2 cent off the lows, folks. Trading heavy right now. Maize down 9 1/4 cents to 7.47, and that too is a 1/2 cent off the lows there. How about the hard red wheat in Kansas City, the old HRW down in KC? That's down about 8.5 cents, and that's March. The price, 8.36 1/4. Maize down 8.5 cents as well to 8.31 1/4. So those are also about a couple cents off their lows too. So trading heavy in both Chicago and Kansas City wheat. Let's check in on Minneapolis. What's happening in Minneapolis? Well, March is down 4.5 cents to 9.05 even. And maize down 5 cents to 9.02 3/4. Okay, and then cotton. Well, 142-point gain. We'll take it. 82.27 is last. That's in the middle of the range, maybe towards the upper end, but still 142 points, not bad when it comes to cotton. That gives us the opportunity to bring back in our next guest analyst is Todd Horowitz. He's with Bubba Trading, and I think he's in Vegas. He's just had a big shindig out there with all his customers. Todd, we had PPI this morning. We got over that hurdle. We got over the WASD hurdle. What's our next hurdle?
I think trying to get some liquidity and some volume back in the market, Scott. I'm watching this and I'm looking at the volumes in the grain markets. We're going to do about 1/3 of normal today after a report, kind of unusual. Equities are going to do half of normal. There's basically no interest in these markets. The only thing that we're seeing some real action is in the crude oil markets, which once again were much higher and are now lower on the day. You know, this whole situation, I mean, it's really hard to grasp when you really are lacking liquidity to any market right now.
Yeah, that crude oil is interesting. The administration's got 68 to 72 as that level that they said they want to replenish the strategic oil reserve. And people are waiting for that to be a floor, but who knows? We could go through that. That's, when everybody thinks that that's going to be some resistance or support, some support. And then it usually doesn't really work out, number one. Number two is this is going to be a pretty expensive crop to put in the ground here, Todd. I mean, we're going to need to see better prices on the big board because of how expensive things are going to be. So it'll be interesting to see what these producers want to do.
I think that we're going to see a lot higher price. Scott, I think that in 2023, we're going to see a boom market in commodities, I think. I don't understand what's really holding up the equities in general. I think that the pressure being put on the commodity space right now is by the funds and the big banks and those who are actually trying to accumulate some of these assets because of the lack of liquidity and the lack of volume. They can kind of put their weight on it and kind of hold them down as they're actually buying them on the other side. You and I have seen this movie in the past, and usually it leads to, because if it doesn't, a lot of these smaller farmers aren't going to plant next year. They can't afford to plant. They're not going to make enough money to plant. So there's a lot of issues that are really arising here that we can't, just ignore. But right. So far we are just ignoring them.
All right, hold that thought. We're going to go away. We need to pay some bills. We're going to come back and talk more with Todd Bubba Horowitz from Las Vegas after this. All right, welcome back. Let's talk about the cattle here. The Cow Guy likes to talk about live cattle. That's a cheap segue into what live cattle are doing here in Chicago, or not here in Chicago, up in Chicago. Said from a guy that's used to saying Chicago. All right, it's February live cattle, $1.57 higher to $155.45. Remind everybody, these prices are brought to us by Bar Chart. We got April up $1.22 to $159.27. We move over to feeders. What do we have going on in feeder cattle? It's mixed. Jan's up 25 cents, 183.72. You can tell this is quiet. March is down 12 cents to 184.92. Okay, and then lastly, lean hogs. Let's take a look at those before we get back to our guest analyst. Fab lean hogs are off 77 cents in Chicago to 83.92. April's off 27 cents to 90.47. And let's bring in Todd Horowitz. He's with Bubba Trading. Todd, anything jump out at you when we talk about these livestock prices?
Well, again, the same lack of liquidity. I'm looking at volume, Scott. We're at about 20% of normal right now with an hour to go. But I think it's playing out exactly as you and I thought. When crude oil is lower, cattle's going to be a touch higher and hogs are going to be lower. And as if that reverses, I think they'll rotate back the other way. But I do think that they both have established a fairly solid high and a fairly solid low. And I think it's just playing inside those bands until we get some sort of reason to break them either up or break them down. And I don't think there's a lot of room to go to the upside, but I'm certainly not negative them, but I just don't think there's a lot of room to go up. So
we've got a CPI hurdle to get over next week. I mean, what else do we have? I mean, we probably have some other figures I don't have at the top of my head, but we got over two big ones today, PPI and also this WASD. Are we now just going to trade sideways here, waiting for the beginning of next year to get our teeth in it again?
I would think so, Scott. I don't think we're going to get that big Christmas or the Santa Claus rally. I think that the markets are going to be just doing nothing. It's been pretty consistent for the last couple of months that we continue to lose action every single day. And with no liquidity and no volume, where are we going to go? So I think we're going to see some big action in the first of the year. And I do think that you'll probably see equities get hammered, which I think would be more bullish for the grains and everything else as well.
All right. That's it from Todd Horowitz. You can go hit the pool now on Friday. That's good stuff. Bubba Trading in Las Vegas.
A little chilly today, baby.
All right. I'll talk to you later. Thanks for all your input. Let's bring it back here to Nashville so I can throw it back over to Suzanne.